right, shifting gears now. Let's say you do want to invest in the auto industry, but you don't want to invest in Tesla because of what's going on with that stock down more than 40% to start the year. There are, of course, other auto stocks outside of the EV maker, particularly perhaps in auto tech. We're navigating how to play the auto sector with the Yahoo Finance playbook. And joining us now on set, Emmanuel Rosner, Managing Director and Senior Analyst of Autos, Parts, and Auto Technology at Wolfe Research. And it's so good to see you in person. Thanks for being here.
Thanks for having me.
So when we look at the other actual automakers, we'll get to auto tech in a moment here. You obviously have Tesla, which we'll leave to the side for a moment. You've got GM, you've got Ford. And I don't think you're an enthusiastic buyer of any of the OEMs or the traditional car makers, right?
That's fair. It's a very tricky time to invest in autos right now because you have that threat of tariffs. This is something that has the potential to throw a complete wrench into the auto sector. $200 billion of autos come into the US every single year, whether it's auto or auto parts. You put a 25% tariffs on it, on Mexico and Canada, that's a $50 billion headwind. It would wipe out a lot of the earnings from these automakers. So right now we're very much in the wait and see mode. April 2nd is a big, big day. We'll find out what kind of tariff we're talking about. Assuming these are manageable, we would be more constructive. But right now, it's truly something that is existential, and it's hard to overstate that.
Well, to that point, where do you feel like we're at as far as sort of how these stocks have acted? Right, GM and Ford have both moved a lot on tariff news. Where are we sort of priced there in terms of, are we priced for 25% tariffs on Mexico and Canada, or if we get those full tariffs, is there a lot more downside to these names?
It's a great question. On the one hand, there's very large overhang on these stocks, so they're not going anywhere. No one wants to really own them ahead of some clarity on this. On the other hand, it's not possible to argue that it prices in a high probability of them, because let me give you some numbers, right? For example, GM guided for about $16 billion of EBIT this year. If there were tariffs of 25% on Canada of Mexico, that would hurt them potentially by $12 billion. You haven't seen that kind of move. For Ford, for Stellantis, it would wipe out the entire earnings or potentially the entire free cash flow. So this is not what's in the stock. The potential for tariff is so damaging for the autos that basically the market has said, look, this is so bad, let's assume it's not going to happen. But at the same time, they're also not buying these stocks. So what we're looking for is clarity. How bad is it? Is it really bad? And potentially a removal of overhang before really going in. But if we get those things on April 2nd or later, and the overhang is removed, then I think that creates some really interesting opportunities, and we could definitely speak about that.
Yeah, let's speak about that, because on the other hand, what about the demand picture? It's not like this is an amazing blockbuster car demand picture either, right?
It's autos demand is very much hanged in there in the US, so we've been running it in the 16s basically last year. It's this month, the month of March, despite all these headlines that we're hearing on the consumer, probably going to be another 16 million type of month. So we haven't really seen the weakness yet in terms of autos demand. Now, if we do get tariffs, the cars would be probably $3,000-$4,000 more expensive on average. The consumer could still potentially weaken, and you may even have a payback if there are some consumers that are pre-buying now ahead of tariffs. You would have that payback. So it could very much weaken very quickly, starting post-tariff. But as of now, we haven't really seen it.
So we said we didn't want to talk about Tesla specifically, right? But someone that buys Tesla is usually probably interested in sort of the technology aspect of the auto industry, right? Are there other names available that get into the technology of the auto industry? Maybe they aren't making the cars, but they're sort of providing that maybe tech investor
and
side
maybe
of the
without
chain.
the Tesla baggage.
Right.
Yes. All right. So we can speak about Mobileye.
Yeah.
Mobileye is a name that we like. It's essentially technology supplier that makes software for autonomous driving. They provide complete solution to legacy automakers that are not called Tesla. How could they offer autonomous cars essentially? And they offer a system that go anywhere from like semi-autonomy to full autonomy to potential robotaxi. Now, the stock has been under dramatic amount of pressure in the last few years or so. Part of it is because they need customers and these automakers to sign up and actually buy their product. And a lot of these automakers have been sitting on their hands and they haven't really made any sourcing decisions. So what we like it here is, look, it's had a lot of pressure. Seems a lot is priced into the stock. If these guys this year can announce some legit automakers signing them up for autonomous driving, you have tremendous amount of upside. And it could be Nissan, Honda, Toyota. It could really be some legitimate automakers, but it needs to happen to validate the story.
And the two other stocks that you have outperforms on, I believe, are Autoliv, and Aptiv, which
Yep.
are sort of in the car building ecosystem.
Yep.
Where do they fit in, and why are they not as vulnerable as some of the other stocks that you look at?
No, so generally speaking, it's all assuming tariff is manageable, so it's on the other side of it. But what we do like about names like Autoliv and Aptiv, they are somewhat higher tech. Aptiv is focused on electrification as well as active safety. Autoliv makes airbags. What we like about them is, first of all, there's quite a bit of secular growth, which is not just waiting for people to buy cars. There's more and more of their content in the cars. These guys are also aggressively taking out cost, especially Autoliv. They're reducing headcount pretty dramatically. And what we like, especially in the case of Autoliv, is all that free cash flow, they're aggressively buying back the stock, so returning it to shareholders. This is essentially a good recipe for strong free cash flow and strong earnings growth as well.
Emmanuel, I want to come back to something you said a minute ago. You talked about sort of the traditional automakers getting into autonomous driving. And part of me wonders, does Tesla have to succeed first to make these companies move, right? If I'm Ford or GM, I get why they'd want to get into it, but would that be sort of the catalyst that really expedites that industry growing within autos?
Yeah, no, it's a potential catalyst. The fact, if Tesla is successful at it, and by successful we don't mean that the technology works, but they can actually turn it into a real business where there would be a higher take rate of people paying for FSD. Other automakers would basically be looking at it and say, look, I'm going to invest in it because it's actually a real business line. Part of the issue with Tesla is the technology works quite well, but the take rates remain really, really low, which means people do not want to pay $100 a month for FSD because it's not useful enough for that kind of price. So we need to see that, and I think we're starting to see it. Tesla is obviously offering a promising robotaxi starting in June in Austin. If that is successful, other automakers will take notice for sure. We think it could be good for Mobileye.
Emmanuel, thank you so much. Good
Thanks
to see
for having
you.
me.
Appreciate
Good to see you.